I'm Jared Johnson, and on this episode of the Stock Market Playbook, we've got Jared Dillian, who probably has the most varied background of any trader I've talked to. And we've had some interesting ones on here. We have ex-Lehman employee, we have DJ, we have creative writer, and currently a commodity trading advisor running a fund and running money for clients in the futures markets. He's got some interesting looks, and he also has an interesting thought on what black swan we might see coming up. And I think it could surprise you. I think you're going to love this episode. Give it a look. Take it away, Jared. So thanks for joining us on the podcast, Jared. It's always good to have a Jared and Jared together.
Jared squared.
Jared squared. Funny thing is, I have a call in a couple hours with some investors, and all three of them are named Brad. So it is legit one of those wild days. So I have a podcast episode with Jared and Jared, then I have a call with Brad, and Brad. So at least I don't have too many names to remember. That's always positive. But, oh goodness. Anyway, glad to have you with us. Anybody that I think you're a familiar face. I think you're a familiar name. I always like to hear. I always like to have my guests just kind of give a brief intro about where you're coming from. And I think it might be difficult for you to give a brief intro because you have quite a full past and a journey getting to where you are. But give us a high level. I've got a lot of questions about your journey getting here, but give us kind of a high level view of who you are and how you got to where you are.
Yeah. So I went to school at the U.S. Coast Guard Academy, which is one of the service academies. I majored in math, graduated in 1996. I served 5 years in the Coast Guard, a couple years on a Coast Guard cutter out of Washington State. And then I went to PAC Area Intelligence in Alameda, California. When I was there, I got my MBA part-time from the University of San Francisco. And I also got a job as a clerk on the Pecos Options Exchange. So I was doing open outcry trading. And then from there, I got a job at Lehman Brothers in New York in 2001. Started there the summer of 2001. For 3 years, I did index arbitrage.
Mm-hmm.
And the last 4 years, I was the head of the ETF trading desk. Also did a lot of prop trading along the way. And what else? While I was at Lehman, I started doing a lot of writing. I was writing market commentary to clients, and it got, it went pretty viral. I had several thousand subscribers on my list, just for free. And I got the idea that I could start a newsletter once I left Lehman. So when Lehman went bankrupt, I quit and started the Daily Dirt Nap. I've been doing that for 18 years.
Which is a great name, by the way.
Yeah.
The Daily Dirt Nap. That's great.
I've been doing that for 18 years. It's been a good business. 2011, I published my first book, which was called Street Freak. It was a memoir about me working at Lehman. Actually up to book 7 right now. The Awesome Portfolio is coming out in September 8th. But I've published 2 essay collections, a short story collection, a novel, No Worries, which was a trade nonfiction book. This is book number 7. Book number 8 is coming out next year. I'm a DJ in my spare time. I played all over the place. I get gigs in Vegas and New York and Miami and stuff like that. So I do that in my spare time. I also teach at Coastal Carolina University. I teach finance. So
I was going to say, what do you do in your spare time? Is that as I was reading through all of your stuff, I thought, okay, we have trader, market commentary writer, author of investing books, author of some creative writing, short essays, DJ, teacher, and if I get this correct, you You got an MBA, but then you also got a degree in some creative writing or
Yes.
something.
Yeah, I got a master's in fine arts. I have an MFA, which I actually got in the last couple of years. I got in 2023 from SCAD, Savannah College of Art and Design. So got an
Good,
MFA in writing. So
good for you, man. You're just hitting the learning scene head on, which it's great. I think far too few of us keep the brain exercised that much. So good for you. That's what a story. So if we go back just a hair, um, you I feel like you speak pretty highly and pretty positively of your time at Lehman, and you didn't get lucky and quit before everything came apart in 2008. That's when you left when they were done. Is that
yep,
correct?
yep.
But the you were there for about what, 5 years?
7 years.
Oh, 7 years. Okay, 7 years. And your time there was a positive, good time.
Yeah, I mean it was the toughest job I ever had, especially trading ETFs. Trading ETFs in the mid 2000s was like trading the long bond in the 80s or 90s. Just the most high stress trading job imaginable.
Sure.
Uh, I was I was basically homicidal most of the time. I just wanted to kill people, which is why I have all the gray hair today.
For sure.
So yeah, it was. My heart was. It's not a good job when your heart is pounding like 20 times a day. Like it was incredibly high stress. So
I can imagine, and I'm trying to remember. I mean, I'm old enough to remember 2008, but I can. I'm trying to think. Were there smart watches in 2008? Was that
no.
a commonly worn thing? So you couldn't actually easily monitor. Because I'm just saying, if you had one on, you probably would have said, "I got to take this thing off because knowing where my heart rate is stressing me out more."
Yeah.
That's
Yeah.
that is wild. So Lehman Brothers, what was and I don't want to spend too much time on this because it's probably you've probably told the story 10,000 times, but what was the tone at Lehman Brothers as everything was starting to unravel? Did anybody have a kind of a line on this before it happened, or was it really just shock and over?
No, I mean, the stock peaked in the summer of '07. And the chart was just death. I mean, you look at the chart, like they could not buy an uptick. The chart like just went down every day. Our clients, our hedge fund clients, this was after Bear Stearns, and our hedge fund clients were telling us that we were next. And they told us that they were shorting our stock. They wouldn't short it at Lehman, they would short it at Morgan Stanley, but they told us they were shorting our stock. Around the summer of '08, I actually made somewhat of an effort to look for another job. And I didn't really find anything appealing. And that's when I decided to just do the newsletter when I left. So, but a lot of people were in denial. The stock peaked around 85. Even when it was down at $15, people still thought it was going to come back. Um, a lot of people had structured their affairs in such a way that they had a very high cost of living, and they just didn't have any savings, which is hard to believe when you're getting paid that much on Wall Street. But I lived very frugally. I had a lot in savings. I had a big cushion, so it enabled me to take a risk and do something else. So
That is awesome. That is, I mean, what a wild ride. The typical Wall Street situation, high cost of living, got to make crazy money to just stay up, and you took a different route, which is super interesting. Putting some money aside and giving yourself a little bit of a path to do something else, which then led to the newsletter and everything that you do now. So what do you do now? I mean, you teach, you DJ, you invest, you newsletter. Are you trading your own money? Are you trading money for clients? How's that going?
So I do have a CTA. I don't know if you know what a CTA is, but it's kind of like a hedge fund. It's in the futures
Yep.
world instead of the stocks world. So I have a CTA. I do manage some outside money. It's pretty small at the moment. It's called Armington Capital, and I do that. I do the newsletter. That those two things take up the majority of my time. Um, and I still trade my own money pretty actively. And yeah, I mean the music and everything else is kind of on the side. So
Gotcha, gotcha. Now, on a random side note, tell me, so with your CTA, early on in my career, I've got a hedge fund, and we're all equities, right? And but to have a CTA, uh, dealing with the NFA and the CFTCs, quite, I feel like they're more difficult. I feel like they're the most difficult. What has your experience been keeping your CTA current and running?
it hasn't been too bad. I haven't been audited yet. Typically, you get audited every 2 years. I'm right at about 2 years since I launched. I haven't been audited yet, so that's coming. Um, really, the paperwork burden is not terrible. The thing with a CTA is that the startup costs are much lower than a hedge fund. So
Yeah.
that was appealing to me. Um, but yes, the NFA is a prudent regulator. They are much more activist than say the SEC is. The SEC tends to walk in and clean up a mess after the fact, while as the NFA is really much more prudent in preventing problems. So
Yeah, yeah. That's all of my dealings on the commodity side was, I mean, it wasn't bad. It just seemed like there was quite a bit of work involved there. But setting up a hedge fund was probably 10 times more difficult. So, but I was curious about the ongoing. But anyway, beside the point. So, what is your focus? You're obviously focused in the futures market. What is your approach, and how are you putting this money to work?
so it's macro and it's discretionary. It's not systematic. It's completely discretionary. Um, I tend to have a mean reversion philosophy rather than a trend following philosophy. Most CTAs are trend followers.
Hmm.
I do the opposite. I try to identify tops and bottoms and fade and go the other way. So it's kind of interesting because it's actually sort of a hedge against trend following strategies. So yeah, works for me.
And what markets are you, or what instruments are you trading the most? What are you?
Literally everything, but most often equities, rates, and FX. Most often, yeah.
Gotcha, gotcha. Very good. The FX space has been kind of interesting for quite a while. And on that note, are you doing any dollar index trading? Because I think there's some interesting things happening there.
Yeah, I do. And looking at the DXY right now, it's collapsed into a very tiny trading range. The dollar's been rallying for the last 6 to 8 months. And the timing on this podcast is pretty interesting because the FOMC decision is due out in 45 minutes, and we're probably going to see the dollar break one way or another. Um, I'm bearish for the time being, but we'll see. So
Gotcha, gotcha. It is interesting to see the dollar sitting at the same place it was in 2015. I mean, we're a decade plus of being in this same area, um, but I feel like the calls have been fairly bearish on the dollar the last little bit, and it's hanging in there. So, um, but looking at some of these levels and this big massive trend and channel it's been in since basically, what about the 2008-9 lows? Is that I don't know why I have the wrong chart here. There we go. Yeah, it's been in quite the channel since about 2008, heading up. But you think it reverses from here and maybe starts making its way lower?
yeah, I do. I think the tariffs in the spring of last year were the top for the dollar. I think that was a massive sentiment top. And also, you can't really trade on purchasing power parity, but I do think the dollar is still expensive in real terms after going down 10%. You have Americans going to Japan, going to Europe, middle class Americans making 70,000 a year, living like kings in Europe and Japan, getting dinner for 25 bucks and stuff like that. Like, the dollar is very strong still, even after going down 10%. So,
Yeah, yeah. So there's some room to go there. So in your approach and looking at the dollar, looking at anything you look at and trade, I mean, what are kind of your top, I don't know, two or three metrics that you look at the most? What gets you interested in a direction?
so I'm a technician. I'm not a CMT, but I'm sort of a self-taught technician. I look at the mark indicators. I look when they line up with MACD divergences, RSI divergences. I like to look for divergences and oscillators. Combining that with the mark, that helps me identify turning points. I think we're at a turning point rates here. I think rates have topped. I think if we were to do a podcast 6 to 12 months from now, I think rates would be much lower. So,
And I mean that's obviously been a heavily debated topic, and as you mentioned, we'll see the FOMC news in less than an hour. I mean, so you disagree with kind of the rate potential rate hikes? I mean, there's talk of one, two hikes this year. You're
yeah,
saying,
I, this is going to be stale very soon, but we've just in the last month we've had a very soft CPI number, a very soft PPI number, a very soft PCE. The payroll numbers were bad. I mean, we've just had this run of data that has just been incredibly soft, and we're still pricing in about a 30% chance of a rate hike. I think the only reason that's the case is because Warsh was so hawkish in his first meeting at the press conference. All he talked about was price stability, and we don't know what his reaction function is. And there's a lot of hawks on the FOMC. And in spite of all this soft data, inflation has been running above trend for a long time now. So I think there's some institutional pressure to put a lid on inflation, but still, like I said, over the last month, the data doesn't really warrant a rate hike. So
yeah, yeah, for sure. It's interesting, and it is always tough when we get. I don't know why Bernanke stands out to me the most when he came in, but you know, I feel like the descriptions of Bernanke were he doesn't know how much power the accelerator has. He was kind of and we were feeling it a lot. So we're definitely going to see how Warsh does, but that's interesting. So along with that, you're watching this. You kind of take the technical analysis, technician kind of approach on your trading. You're trading now. When you say you're trading equities, are you going indices? Are you going direct equities on that? How does that
well,
go?
indices. Interestingly, single stock futures are now listed. I haven't looked at them yet, but there's a chance I might be trading the single stock futures. But right, just doing indices for now. So
Gotcha. So, um, and on that note, I mean, what are you seeing? We've had this interesting. I mean, SPX has been just rolling along, but then we've kind of seen it stall out the last 3 or 4, 5 months. I mean, what's your take on this kind of going into the end of the year?
well, I think the AI semis tech trade is totally cooked. Semiconductors are now way down from the highs. And I think the only thing holding up the index here are banks and industrials. I'm actually seeing some technical sell signals on banks. Um, if financials go down 10%, the S&P is going to be trading at 6,800. Like, so I think I do think the market is starting to roll over. It's a very long process. You have a lot of flows into the market, billions on a daily basis from 401ks and stuff like that. So it's just really hard for stocks to sell off. But I think we're much closer to the end than we are to the beginning. So
Interesting, interesting. And we've seen, I mean, as things continue to make new highs and we continue to see just this slugging along. I mean, the thing I love to look at is now tell me real quick here. Do you find yourself in the longer term or shorter term side of things? Typically, futures traders are a little more on the shorter term. Is that
I tend to be medium to long term, actually. So
gotcha? And so,
yeah,
what's a typical duration for you? Are you 6 to 12 months?
I would say 3 to 6 months. Yeah.
Okay, three to 6 months. So on the equity side of things, on the on the index plays are just everything's just flattened out. So what do you do in these kinds of moments? Is there always something for you to trade? Are you finding the commodities to jump into some wheat or something, or are you taking on any short term positions?
I mean, I'm kind of a tourist when it comes to commodities, except for oil and gold. But I mean, there's always something to do in the index. I've also, I started my career on the options floor. I have a lot of history trading options. I've even written an options course. So there's usually some structure I can put on in the S&P where I'm net long options and I'm not paying too much theta. That's kind of how I've structured things right now, betting on the downside. So
Gotcha. That's a good way to go. And the futures options are always, it's interesting. I feel like the last several guests I've had on have been futures traders, and and I very rarely deal with futures traders. I'm equities. I'm all equities. We're all in the just stock market, and I've had so many futures trading guests, and it's been pretty interesting because I think in general, futures trading has a little bit of a different learning curve than typical equities, and I mean, it's probably a similar learning curve to options. Maybe options have a little bit more, elements of surprise there, but the futures trading side of things. I mean, do you talk about this a lot in your course, in your newsletters, and so on? Are you educating people to get into the futures markets?
no, not at all, not at all. The one thing I will say is that when I started at Lehman in 2001, trading index arbitrage. I mean, I was trading S&P, Nasdaq, mid cap, Russell futures all the time. Also traded a lot of short term rates, Fed funds and euro dollars, because if you have $8 billion of S&P hedged with short futures, you have massive short-term interest rate risk. So I was always trading Fed funds and euro dollars to manage that. So very early in my career, I was exposed to lots of futures trading. So
Gotcha. And are you still doing a bit of that on the rate side of things? I mean, is
yep,
is that
yep, yep.
is that keeping you busy? And how has that been? I mean, we've had such interest rate um, curiosity, I think, for the last little while, right? Are things going up? Are they going down? Where's everything headed? And so, and you've said you're stable to bearish on rates themselves.
Well, I mean, bullish bonds,
Bullish
bear,
bonds and
bearish on
bear the
rates.
rates.
Yeah,
Yeah.
yeah, yeah.
And what is your go-to approach on that? Are you just trading directly the futures contracts on those rates, or are you going through any other vehicles there?
No, I just do the listed stuff, twos, fives, tens, 30s, so for stuff like that.
Gotcha. So maybe a final question, but where do you think where is the most obvious risk to you in the market right now that you think nobody is talking about?
Um, Let me think about that. I mean, the thing is that um, That's always a hard question to answer. I mean, a very obvious risk is, AI has accounted for most of our economic growth. All
Yep.
this capex. I mean, if you take out the capex for AI, we're actually in recession. Most people don't realize that. But I think everybody is focused on that. I don't, that's kind of a known, right? Like that's a risk that everybody knows about. If you wanted to talk about a risk that not many people are talking about, it's actually Ukraine, right? Um, Putin is losing the war. Ukraine is kicking their ass. Putin has lost 1 million soldiers, right? And he has stopped doing
Just
public appearances. He's holed up in the Kremlin. And I think people are not adequately discounting the possibility that he's going to do something drastic, right? I don't, if you look, I mean, I think we all know Putin's reaction function. We've known him for 25 years. I don't think he's going to admit defeat and pull back to Moscow and just say, sorry, guys, like, no, I don't think that's going to happen at all. So, at this point in time, I have exposure to the tails, right? Like, I do not want to have a portfolio where the tails are not hedged at all times. I think the risk of a black swan, something like that, is higher than it usually is, right? So,
Gotcha. Ukraine, and I feel like Ukraine has been kind of peeking up on the news a little bit. I mean, it's always in the background, right, rumbling, but that's interesting. I think that's a good thing to keep in mind, and you're thinking there's potential for some black swan activity, probably a healthy dip in U.S. equities, um, in that space if he does whatever drastic thing he may have hidden up his sleeves, which Putin's capable of a lot of craziness. So,
yeah.
um, interesting. Okay, and what's to wrap it up? What is your favorite trade out there right this moment?
Oh, just
What do you
long
think has the
duration
most
for
potential?
sure. Long duration. Yep. Yep.
Gotcha. Okay, I think that gives us some good stuff to chew on. So, go in the futures market. Technical approach. Does Ukraine sneak up and give us something that we're not expecting? We'll see. But give us a quick. You've mentioned the Daily Dirt app is that your best place for people to kind of follow along what you're doing?
Yeah, you can go to dailydirtnap.com. You can also, I have a bunch of newsletters. Like I have this whole financial publishing company called Jared Dillian Money. So you can go to jareddillianmoney.com. I have a whole bunch of stuff there. My author website is jareddillian.com. And my DJ website is djstochastic.com. So,
DJ Stochastic. I love it. I love it. Well, you have the one of the more interesting backgrounds of anybody I think I've ever met, and I think it's awesome. So, so that's great stuff. Thanks so much for sharing your thoughts, your ideas. Good luck with the FOMC. Let's hope something good happens for the country, for the economy, maybe for our positions. Who knows? We'll
yep.
see how it goes. Thanks for
Okay.
being on.
Thanks.